We have the big name IPO, of course. We've already seen this record month of October. But do you think the IPO activity will continue going forward?
We have a long pipeline, both of approved IPOs and pending IPOs. I think the interest of primary market, both for issuers and investors, is pretty high.
Chairman, we've spoken about the record number of retail investors coming to the market. We've spoken about a lot of institutional names. Do you think this growth that we're seeing in the market is sustainable?
I think it is sustainable because, as you see the survey which has come out, only 9.5% of households in India are invested in the securities market. But more importantly, 22% of the remaining households are willing to invest or thinking of investing in the next 1 year into the securities market. I mean, that's quite a lot. In fact, we would have a problem of plenty, in the sense of how to manage the new households and the education and the awareness, which is actually a very, very important focus area for us.
So what are the risks that you are seeing? What are the biggest risks that SEBI is seeing amid this influx?
I think the risk is regarding also what is the level of awareness. Because even if you would say that 63% of the households that we surveyed, I mean, it was a large survey, so it could be considered quite a representative of the population. 63% of the households are aware of the securities market, but only 36% have got moderate and high knowledge of security markets. So therefore, if you have 22% of households are intending to come to the markets the next 1 year, it's important for us to see how we are able to get that knowledge to them, that they invest wisely, that they are not led astray, and we have another data which is also on finfluencers, where while 60 to 70% of the people would be actually accessing the finfluencers, but they have 93% confidence in what the finfluencers advise. So it's very important to really look at our investment awareness strategy, to look at if you have influencers, so how to register them and to get them to to our side in a way, so that they are able to educate them properly, instead of making a business out of stock tips and guaranteed returns and other things, which may then disappoint first-time investors. It's important for the first-time investors to come safely, and that's an important thing that we have to ensure.
One area of concern for SEBI, of course, which SEBI has spoken about very widely, is retail investors coming into the derivative space. And your officials, you've said you rather intend to move to longer-term derivatives contracts in the equities market. Does that mean you'll be culling the weekly expiries?
I think this is in a process which we have been basically based on data. We are evolving. Our market needed corrections and reforms in terms of regulations as well, and therefore certain measures were put in place, and some of the measures have been rolled out, something in July, and something will also kick in as per the timeline given in that new regulations. What we really want is to keep on actually monitoring this data and putting it out. So be transparent about what's happening. Some of the measures have yielded results in terms of bringing down, in terms of premium terms, the volumes on open interest terms have come down, and also the individuals' turnover in premiums has also come down, where one of the major concerns was around individuals, and some of them could be the even the first-time individuals not really investing in cash market, but still straight away going to very, I would say, riskier and difficult part of derivatives. Not really stock futures, but options. And those options, again on weekly terms, they looked very intuitively, very, nice to see, because, the very nearer the expiry, the premiums would be very small in terms of affordability. But then you can actually lose it, and millions of the people lose it. So we have seen, actually, there's a 20% reduction in also the number of individuals who are bringing in the data between December and May. So we are looking into what measures have worked and how that measures will be further there. And again, like last time, we will be engaging deeply with through public consultation with the market participants as well as people at large to really take any step forward. There's a lot of unnecessary speculation on day-to-day basis on, whether it's going, it's coming, it's going, it's coming. And I'm record on saying that whenever, as and when we are ready after our deliberations of any steps needed for further improvement, we'll definitely come out with a public consultation papers and consult widely.
So as of now, you're just watching the data very carefully to see if there are any trends. Thank you, Chairman. We've spoken a lot about investors. Flipping to the other side, you have a high-profile case, of course, on market manipulation. We have the Jane Street case, which is in court right now, of course. Can you tell us, Chairman, how expansive is the alleged manipulation in this case? Are you still digging into the other trades that Jane Street has been doing in this market?
I'm sorry, we don't actually discuss the individual cases. It's not correct to discuss it. Something is in a court process. I've said it before, we speak through our orders, not through the media on these cases.
However, since the case is in court, the courts globally, not just in India, courts globally sometimes tend to go against regulators. The LIBOR case was one such instance. Irrespective of how the courts rule on various cases, including Jane Street, of course, what are SEBI's guardrails to ensure manipulation, especially of this nature and this magnitude, doesn't occur in the Indian markets?
But I'm afraid I can't agree with you on your first statement that the courts don't agree. I think let us accept that the courts are fair, they give the people a chance, as much as to regulators as to others, and let that jury be out, let the verdict come. All what we have found is also very much in the orders themselves, and anybody can see, what is the kind of patterns it is there. We consider it manipulation. Somebody could say that it could be arbitrage, but there is I think as intelligent beings, we can really understand the difference between arbitrage and manipulation. Arbitrage is, of course, the plugging the arbitrage is the function of the markets. In fact, the markets function on bridging their arbitrage. If you have two exchanges, then obviously, the price will equalize across exchanges, because if there is one thing, the movement will take place. Now, future market is also, in fact, has to be a supportive of the cash markets and vice versa. But manipulation is something which will have certain patterns, which will then be called manipulative. And the regulators' orders, regulators' findings initially was in the interim basis that these are the manipulative pattern. But then people have been given a chance to rebut it. So it's not that, that's a final thing from regulator side also. So anybody who is wherever the regulatory orders are passed, they have every chance to go back when they are asked for a show cause or for a reply, or they can go to a higher forum. So let that be. I think we should not be discussing individual cases, but I'm talking as a generic thing for any such case of of this nature.
Chairman, one thing is clear, a lot of firms want to be in India right now. We're seeing a lot of interest. How do you see the HFTs especially and algorithms? AI is here to stay, of course. How do you see machines and technology playing out in India? What kind of role do you see for them in the Indian capital markets?
They are already doing a substantial part of the trading which takes place is through algo trading and HFT trading. We have already a regulatory framework in place in terms of which algos will be allowed, how they will go to the exchanges, they will be tested in simulation, and also that they do not pose any threat to the markets. But since the technology is also evolving very fast, we should also keep ourselves updated. And that is again, I think anybody who has an interest of development of the market participants and others, they also have a combined interest in seeing that we do have a very, integrity intact, and therefore whatever we do in terms of technology you can't stop, and we have to march with the technology, but with due guardrails.
And moving on to regulations, guardrails on technology accepted. You, of course, want to move ahead with deregulation. That's the direction SEBI under you wants to take. Can you give us a sense of what areas SEBI is looking at specifically when it comes to deregulation, sir?
Well, I would not call it deregulation. My choice of word will be an optimum regulation, because deregulation sort of actually anticipates that you have to reduce the regulation, but optimum regulation might say that in areas where we have gaps, we should plug in with the right type of regulation. So what is an optimum regulation is basically, trying to achieve the purpose and outcome with less cost, more efficiently, with less friction. So we have to ask a question in terms of our regulations. What is it that we are seeking to achieve? Are we micromanaging? Is that micromanaging necessary? Risk have to be managed. How to manage risk better? And once we ask these questions, we will find that some of the regulations, because regulations evolve over time and they go contextually. Sometimes they respond to the corresponding situation. Sometimes the technology is different at that point of time, but they tend to be sticky if not reviewed from time to time. So our effort is that some of those regulations which have remained sticky and which need to be reviewed, so can we have less burden on everyone, SEBI and others, and still manage the risk well, because we have means of technology. So therefore we are looking at those regulations deeply and simplifying, and our process is consultative. So therefore what we are going to do is, like, there is a certain reforms that I can come to later. I mean, if you ask a question in different industries, how we have relaxed the processes. But broadly, in terms of regulations, I can say that we have a market MII regulation, the stock exchanges regulations, which we are trying to now bring them together, consolidate, remove overlaps, and we will do it chapter by chapter. And first tranche of that has already been out for public consultations, so the people can comment, and I think the next tranche will be out soon. So you will have series of tranches to see that the whole of the regulation in maybe within March, we are able to have completely new regulations worked out with public consultations. Similarly, we'll go for a mutual fund regulations, where we will go for, in consultation with industry and other partners, we'll go for again a change. I would say quite a different rewritten, completely rewritten regulations, which should be simpler to understand. And this will be out, I think, maybe before December. Again, you will see once it comes to public consultation. The advisor IA and RIA regulations, we had undergone quite a bit of a change, and there were some problems with that, some difficulties. Those difficulties we also removed, a month ago, and so therefore I don't think that really requires very many changes. So depending upon the needs, etc. AIF regulations, a lot of changes have happened. FPI regulations, we have made changes, and FPI registration, as I said, that we will make it possible just in a few days. And it's not months, it'll be days.
Chairman, you recently had a roadshow in global capitals in London, Singapore, etc. What is the biggest ask of global investors when it comes to India?
I think some of those, one, registration is one, the ease of access, and some of the FPA regulations, we have the issues around, the size criteria, which was very restrictive, which we have relaxed in the month of March itself. There were some issues around our, for example, in terms of block deals, which we have recently done. I think there was a lot of concern regarding people not being able to do the blocks effectively. There is a closing auction issue that we will resolve, because that we are committed to resolve, and very soon you will see necessary orders in this regard on closing auction bringing in. I think these two things were quite a bit of, I say, outlier vis-a-vis other jurisdictions, not being, and those we have addressed. So in general, I think there was a great deal of, I would say, appreciation for what we are trying to do to make things simpler.
And how is SEBI working with the other regulators, especially to improve competitiveness of the Indian markets?
We have a very active dialogue with Reserve Bank of India. And IFSCA, we have done several things, and some of the important developments in IFSCA have been also facilitated by SEBIs in terms of FPI regulations. Also, with other regulators, with CERC, we had electricity derivatives rolled out. With again, both the regulators worked out. With the Reserve Bank of India, we have several, partnerships going on in terms of how we can, including, for example, on bond derivatives. We have created groups from both the RBI and SEBI side to have dialogue at different levels, and I and Governor and I also meet, periodically to settle these issues.
The Governor, of course, and you go back to your time in New Delhi working very closely together. What would make you very proud? You're 6 months into this role now. What would make you very proud as a regulator? What is your personal vision for the Indian markets?
I think I'm particularly proud that I'm really being here doing my job. That's it.
Come on, a little bit more, Chairman, a little bit more.
No, I think that is there, because India, in my opinion, Indian capital markets have come of this age. I consider that SEBI as an institution has worked very, very well over a period of time to make it happen. It's a solid institution. And we must also contribute, because everything is there. So we have to remain smart. And in order to, if we are able to contribute to, continuing to update ourselves, that's a job that we will do. And
what is the most exciting development that we should anticipate in the capital markets?
I think overexcitement in capital market is not good.
Chairman, you're speaking to an audience in a month where we've seen record IPO activity. So thank you very much for your time. This is a question I ask everybody. What else should we be asking you as an audience that is very interested in the capital markets that you should share with us?
You are free to ask whatever. I told you, there is no go area. You can ask anything.
Well, then, as a closing question, let me ask you this. We are sitting on a month, while we spoke about record IPO activity, we spoke about record domestic money coming in. We are also potentially looking at a year with FIIs leaving. What is the need of the hour? do we have to take any measures now as regulators, as financial professionals, to get global foreign portfolio investors back into the country?
I think the job of a regulator is to facilitate a market where people can come in there, because we do not control the economic circumstances. We also do not control the risks that come from externally. We do not control how geopolitics will operate. We would be able to say that our markets should always function without interruption. There should be a trust in the markets. We protect the investors. We protect the people who come in, market participants. They trust each other. The technology is sound. The manipulation is curbed so that the people have a fair play. And we are just. And then, of course, the other circumstances. And we should also, we should also support innovation. We should not stifle innovation. So we have to move with that. We have to work with the partnerships. And another important thing is that I think Indian model is very good, is trying to involve consultations. Because we learn from consultations a lot. In many respects, our first consultation paper sometimes undergoes a lot of change when it comes to actual policy. Because in between we get facts and figures and points of view and differing points of view, because this is a very contestable, some of the issues are very contested. Closing auction, for example, it's not an easy thing. There are different people, domestics and, FIIs, they may not have the same opinion. Now, how do we bring them table, break down, data analysis, convince the things that, things will work it out, and maybe sometimes give and take, work out a compromise, so that the people get confidence to go ahead. Because whenever you have newer things, the people do have, resistance. You have, things might go wrong. So we need a lot of these things. Once we sit in a room and work it out through the committees, through the consultation process, then we work out a better solutions. But I think once we decide, we have also seen in India, we are able to work out on a scale which I can say is many global jurisdictions are envious of. If you are seeing, the valid UPI handle, this is something, a new payment subsystem we have created in order to look at the systemic issue, because we think in terms of millions. Now, if we have to think in terms of another 20 million, 30 million coming over here, we can't in things up, somebody phoning up and advising. You have to really think in terms of very big systemic solutions in order to curb frauds. So therefore, now this is one solution where we have said that it is as easy as 20 seconds. You can have a 20 seconds, you can check on any account and say, or scan any QR code and say, is this money I will put, is this account belongs to security market? Is this account which is regulated? So that, because only when the money goes into a regulated account is one where we are able to, so distinguishing it from the normal payment system to another one under the same umbrella of NPCI with similar facility of UPI and with valid. This was something which, in a matter of few months, we have been able to pull it together, roll it out technologically. So how is it possible with so many players coming in, which means that an ecosystem which actually cooperates, because it is in everybody's interest to have that kind of cyber resilient framework where we would, have protection. No broker would like, his app, his app to be cloned and then he be blamed for whatever the swindling takes place.